All right. Thanks everybody for joining. This is the week of October 16th. And see what the market did this week. All right. Let's look at the Dow. Actually had a good week this week. If you look Monday, Tuesday, Wednesday, Thursday, and Friday, we're down the first 2 days of the week, but the Dow had a really good week to close it. Wednesday was a reversal day. Up big Thursday and Friday. If you look back in the context of kind of where we were, we're coming off the lows of the last 2 weeks. Like I say, dipped down the first couple of days of the week, but had a nice bounce Wednesday, Thursday, Friday on the Dow. On the ES, I'm sorry, let's go. That was the Dow. Let's look at the NASDAQ quarter. All right. NASDAQ, pretty much the same. Down first 2 days of the week, up good the last 3 days. So tech related stocks should have done well. Look at the Russell. Actually, Russell was up on Tuesday where the other two were down. Russell pulled back yesterday. It went at one point during the day, it closed pretty well, but then it retreated, came back down. And let's look at this S&P. So S&P 500. I think remember last week or week before last, we talked about the significance of this 4,300 level. We never did break back down to those levels. And actually, when we gapped up on, I guess that was Thursday of last week, we had the first 3 days down, touched this trend line. But you can see here, we touched the trend line on Wednesday, but we got a significant bounce. So the market is looking well. Look like we might be out of the correction area of September. Still want to keep an eye at this 4,300 level. If we revisit, we'll give up a lot of gains if we get back down there, but just want to keep that as a line in the sand. All right, let's look at some of the individual. Let's see. Let's go to our list here. All right. Thanks for joining, David. How you doing? All right. So let's see. Let's look at that hood, Christian. Robinhood. Yeah, this 40 is holding.
It's holding.
It's holding. That's about all we can say. It's holding.
That's it.
It's holding. Hey, but you know, that's definitely a line in the sand. That's definitely a line in the sand. Let's see what else.
That's it.
Trying to see if you have anything else that you were looking at.
I don't think so.
You know what? I went back and looked at this. I was like, it's interesting. This thing is done well, and I think I asked you about it the other day. A couple weeks
that
ago.
one, yeah.
Did you ever buy this?
I did, but I had to go cashed on it, so I haven't went back in there yet. To be honest.
Okay. So you just got. You did buy some, but you didn't buy any more. But
I bought some, and then I check it out once I got some gains from it. I just didn't go back in there, basically.
Gotcha. Okay. Yeah, this is running. This is running nice. Yeah. keeping within a trend here. Hey, Brand. Yep. So let's see. Brenda, good joining. How you doing? Let's look at your Facebook. Facebook getting killed.
Oh yeah, I had to dump that a while ago.
Oh, you out of it, huh? But let's see where it is in reference to the support levels. Yeah, it's not looking good. I mean, definitely considering this week, Wednesday, the market was up. Wednesday, Thursday, Friday, tech was up good, and to see Facebook going sideways, that's not a good. It's not a good.
Yeah, they're not happy with it at the moment.
No, that's not a good.
They had to revisit him once they get happy with him again.
Okay. All right. Let's see what else you was looking at. Is it ATVI? Is it Activision?
Yeah. Mm-hmm.
Let's see here. Gaming stock. They broke this downtrend, which was good. Thursday and Friday. And right here at support at 75. It actually might be a decent play because they're coming down off a free fall for sure. Yeah, and all right, let's expand out so you can see that this 75 has been a key area. It might not be bad at all, actually. Yeah, 75 first level support and 72. You still got this?
Yeah, no, that one I did.
Okay. Did you adjust your position in this week or no? Not
this week. I think last week I added a little bit to it, thinking, okay, hoping it would he's happy at his bottom. But that was last week. I don't think I added anybody this week.
Did I know you were? Is this Ollie just a trade?
Yeah, I've been out of him. Mm-hmm.
Actually got a good bounce right here.
Yeah.
I was showing a little earlier in terms of this week we had a good bounce in all the indices, Dow, NASDAQ, and the Russell. And particularly the NASDAQ was up Wednesday, Thursday, Friday. And this definitely came off the trend, hit the support of 58. Actually, it's a decent sized correction. So you're talking about 30% down or so here off the highs. Yeah. So 36%. That's interesting. Let me put that in.
Yeah, he's on the watch list for me right now. I haven't tracked out when his earnings report is either. So I haven't decided if there's back happy with him or if there's going to be like some risk whenever his earnings report comes out.
Okay. Let's see something. Let's put it down to take a look at. All right. Ali. Let's see who else has somebody else join in.
Now, one that I did play that I don't think I gave to you guys was Plug. And I'm kind of debating on him right now because he had that huge announcement. Everybody was happy with, so I caught that nice little hop. But now I'm in debate on whether or not to, how I feel about him now.
Actually, this definitely the move right here off of this 23.
Yeah.
Got a quadruple bottom. Yeah. What's interesting though was this Thursday, Friday action.
Mm-hmm.
I don't know if it's just now when you get a move this big, this quickly, it could just be profit taking. So you say literally.
That's what I was wondering. Would that
six.
just been like traders trying to get that quick hit and it'll stabilize?
Yeah, I think so because you're getting close to the previous high.
Mm-hmm.
And you got memory there from this particular area.
Mm-hmm.
So yeah, I think it's just some profit taking, and I mean rightfully so.
Right.
You're up literally in what less than 2 weeks. You're up 40%. So yeah. So and what they take profit on that was sorry about that. Yeah, they were trying to so it was 43. So so up 43 and trying to gave back 10%. So still trying to lock in 30%. That definitely makes sense. Because again,
so just watch that line right there.
Yeah, definitely. I will watch this 30, see what happens, see where it settles out, and particularly if it comes back and touch maybe this 28, if it gets back down on this low. But first level, just see what happens with this 31 and then that 28. Yep.
Yeah, makes sense.
I'm gonna add that as well. All right, let's see. I think Hurt Milton saw Milton on. Hey Milton, how you doing? Let's look at your PLT.
Good morning.
Yes, sir. How you doing? PLTR. So we showed a little earlier, Milt, that NASDAQ particularly was up Wednesday, Thursday, Friday. Actually, yeah, this had a down to sideways day Thursday, and then Friday was actually down. I don't know what's up with that, but actually broke your trend line though, so that's positive. And back to your support of 24. What you doing with this?
I did the same thing. I rolled it over to another 24.
Okay.
This one had me scared all day Friday because it kept going up and above 24. But I finally just rolled it.
That was your. So when was your call 20? So what you close at? You close right at 24. Oh, that's
yeah.
That's
I
crazy.
rolled this. I'm going, this is stupid. I just rolled it over and moved on.
Wow. So you was a penny away from just getting everything out of it, huh?
Oh yeah.
That's crazy. Yeah. Okay. So you just rolled another weekly?
I did. This is probably going to be my last time at 24. I'm being rather aggressive here because I really don't care if they take the stock. I'm just going to buy it right back.
Okay.
But yeah, I'm going to stop being so aggressive. I'm probably going to start slowly inching up.
Okay. Oh, in terms of inching up in terms of your strike?
Yes.
Okay. Gotcha. All right. Good stuff. Let's see. Yeah, this bounce off this 23 was critical. Okay. Let's see. Let's look at that. Let's look at that SM2. See what they did this week. Actually, this is interesting. So we'll go back to the SPY real quick. So it's the Standard & Poor's. So you can see here, the broader market was up big from Wednesday to Thursday to Friday. But looking at this SM, they were just the opposite, right? And so I would consider this possibly some rotation out into some other names and probably profit taking as well, off of this huge run.
Trust me, I know because I took some on Monday.
Okay. Hey, that was good. Monday? Oh, you took it off at the peak. That's good.
What happened when it ran up to 32 like that and then went down like that? I went, okay, that's easy to see what's going to happen next. I mean, that's just like textbook.
So, do you trade topping tails on these candles? Do you look at that, or in terms
What
of
I look at is reversals.
Okay.
When it shot up to about 32, I think that was in the morning. I was going, oh yeah. And then somewhere around closing, I saw it was about 30.61. I went, okay, time to go.
Okay. Yes, let's go back to the 11th. Yeah. Yep. So it was. Yeah, they peaked out at about 11:30 that morning. Yeah, and that was all she wrote. Yeah, got a bounce here at this 28 though. A couple days later. Okay.
Yeah, I started to buy back down there, but I found some more interesting stuff. Okay. Oh, by the way, your Wells Fargo almost gave me a heart attack. I bought into that, and that sucker went straight down.
Hey, you called it a piece of crap. What made you go in there? You say it's the worst bank of them all.
But it rewarded me on Friday because I was in
Friday. But now let me ask you: Did you buy early or did you catch this Thursday bounce off the 44?
No, remember. Well, I'm not sure. I said I was going to buy it on Monday.
Oh yeah, you were sick.
I don't remember that.
Okay.
If I said that, I knew I said I was looking at it, but I got it then, and then it just started tanking.
Yeah, it fell out of bed. Yes, sir.
So I went from, okay, let's see what this does to, oh my God, I'm gonna have to sell this thing at a big loss, and then boom.
Wow. I wonder what this. Oh, earnings came out. I didn't realize. Did you know earnings came out Thursday?
Yes. Remember I said I normally don't buy through earnings, but I'm going, this company has got to have a good earning.
Okay.
And then that just accelerated that.
Okay. Well, it's funny though, because I don't know if they closed. Let's see if they were before or after the bell. Let's see if it tells me.
I'm pretty sure they were before.
Okay. Maybe before. Okay. So before Friday. Yeah. Okay. Oh, yeah. Well, at least you're back in. Here's the real question. You got a tight stop on this thing?
I do not. This is a entry for this stock. I'm going to run this into next year. I'm thinking I'm going to take an investment in this because I know the interest rate's going up next year. So I'm thinking this is probably going to be going up to an all-time high, maybe above.
All right, let's see what that would be. All time about 60, 65. Now let me ask you this: why Wells Fargo versus one or the others?
This goes back to what I said about this being so crooked. I'm thinking that it has more juice than the other ones because it's been more depressed. Because, like I said, this has just been a crooked enterprise. But my thought is that I may sell out and go for a Goldman Sachs or Morgan Stanley because usually the cream always rises further. But I'm just going to stick with this for a little while and just see how it goes against a Stanley or Goldman. And then I may just sell out and go to one of those.
Okay. All right. That's cool. Good stuff. Let's look at Morgan Stanley. Yeah, this thing has been rocking. Look at this. It's a heck of a. It's a heck of a run. Oh, I'm on a weekly. That's why it looks so good. Sorry about that. Okay. Yeah, it's 96. It's an area. Let's see here. Just draw this out a little bit. Sorry about that. Okay. Yeah, definitely there's trend here. Okay. Stanley has done well. All right, let's see if we got anybody else on. Thanks, Milt. Let's see. David, are you at a place where you can talk, or are you at the?
Yes, I'm
What's
here.
up, bro? Cool.
Hey.
How you doing? Let's see. What were you looking at? Let's look at Roblox. Talk to me about your Roblox here.
We fine.
Okay. You added to it, or you just holding?
Nah, I'm just gonna leave it like it is. If I was gonna buy anything, though, I'd buy me like 3 stock. How much money I got left?
I don't know. I ain't even really been keeping up with them. Just really going through them in terms of what you got. You know.
Okay.
Yeah.
I got an option spread open on Charter.
Charter. All right, let's see.
Yeah, for 700 to 710. Call November 21st.
All right, let's see. Did you go through that? You go through that options course?
No.
That's the wrong answer.
Yeah, sure. I did it. Yeah. Need to refresh it, but yeah.
Stupid. All right. Let's see. Would you have a November what?
November 21st. Option spread. Calls 700 710.
Okay.
Buying the 700, selling the 710.
Okay. So typically you can. So one thing is when you do a spread like that, if you're buying a call and selling. I'm sorry. Buying a call and then selling the call on the debit spread there. Usually you can look at this, and so if this is a $10 spread, it should have cost you about $5. So you can usually take the spread, and if your entry on this was around 5, that's a decent price.
450.
450. Okay, so even a little bit better. So you got a 50-cent chance of this thing going up or down. So that's decent. Now, in terms of where you can boost that a bit is, so let's just chart this out real quick and see if you got some kind of juice you got in terms of probabilities. Let's just finish this.
$4-5.
Well, no. So I'm looking at the just in terms of where you are on a cycle here, from a chart perspective. All right, broke that down. Trend. That uptrend here. Okay, the downtrend. All right, so look like you got a support here at 671. You got 690, and if it holds, actually it's decent. So what you got a break even of 705, or for you 704.50. So 704.50 break even. Okay, that's pretty good. That's a good entry, David. What made you pick this?
Researching with the stock group that one of these guys I grew up with, we just started talking about debit spreads and how to use them, and pick one out.
Okay, good stuff. Yeah, so in that course that was telling you about, what they do is that if they go long, they always use a debit spread, because it says, if you buy stock, the probabilities, you got a 50% chance of going up, 50% chance going out. It's like a coin flip. And so this is a defined risk trade, meaning that you won't be able to lose any more than what you put in it in this option trade. And you've defined your risk at $4.50. If that's your entry on a $10 spread. So the way that you would calculate this, you'll say, hey, you take the buy and the sell. In your case, it was a 450, and you add that to the option that you bought. which is the 700. So you take 700 and then you add the $4.50 premium that you paid, and then that becomes your break-even price. So if this thing closes above that 704.50, then you got a profitable trade. So let me just put this. Let's put it on. So just to walk through an example. So let's see here. So buy that one, add a leg, sell that one. Okay. So yeah, so this would be 475. Then say review the trade. So here it gives you some statistics. So like I was saying, it was the 400 plus the 475. So your break even is at 407.75. You got a max profit of 525, and all that is just 475 plus the 525, which will give you $1,000 or a $10 spread, right? And that's what the spread is between 700 and 710. So it's just kind of the way the math goes on it. So yeah, but no, that's good. It's a good good selection on the strike. In addition to where you are in the chart, because like I say, you get this little bounce here, and hopefully you can hold. But if you get a close, what you got? How many days you got left? Let's see.
I got at least 4 weeks.
Okay, 4 weeks.
So I'm pretty sure it's gonna close over 710, probably closer to like 730, 740.
Yeah, but you're capped at 710 though. So the most you can make on this is $525. So if it goes above 710,
Close it.
Yeah, you don't participate.
Yeah, I close it.
Beyond that.
As soon as it hits 710, I'm closing.
Okay. Cool. Good stuff. That's a good entry day. Walt, how you doing? Let's see. What? I'm sorry. Before I get to Walt, hey Dave, was there anything else that you were looking at?
I mean, yeah, but I got FIVN. I got a spread on that one too, and I got a spread on Boeing.
Let's look at the Boeing. See where your entry is on that.
Yeah, it's not so good though, but
no, it's fine.
I kind of messed up on this one, but we're still all right. It's November 21st still, but I picked 225 to 230. I just did a $5 spread on it and I only bought one contract just to see, but it went down. It was at like 222 and now it's at 217. But yeah, I still think I got enough time for it to bounce back to November over 230.
Yeah, looking at this just chart wise, if you get back to this 209, that's a decent area. So really is about $8 in between these three support areas: 208, well $7, 208, 201, and then 193. You can see that those in play. Actually, this 208 is the most recent support. So yeah, and actually I need to put an alert in for this myself because these jokers owe me some money. They took some money from me during the pandemic. I want my money back.
Revenge trade.
Revenge trade. But I do want to see though an entry here in this 208 level. So yeah, let me let's see, get back here. And so it's one thing in your software, you can put orders, alerts in. So if things get back to a certain price, you can watch them. So here on the screen here, I'm showing on the right. So I'm saying, hey, send me an alert if Boeing gets a trade that's below 208.81, and I'm just go ahead and create that alert. And so they'll send me an alert and let me know. And so that's what I want to see here. So if it gets down here, then I may make a decision on it because it will be at my support point. So I would definitely encourage you to use alerts as well, because these things will help you to see stuff, because you may not look at that chart in a particular day. So set alerts on your stocks at your points based upon the chart work that you have done. So, but to that end, how are we doing on our chart work? Are we looking at our charts? Are we going through doing your support and resistance, your trend lines? How are we doing there, kind of as a group? Crickets.
I'd say I'm trying to get a little bit better on that. I actually did buy into your FUBU, and so he's been on a good little run, and so I'm debating on my profit exit point on him, but at the moment I'm just letting him ride.
Yeah, this FUBU has been a nice trade. I have a call. I'm sorry. I wrote a cover call on this that expires this week. So I'm waiting on that to. It expires Friday. It's a 26th, so my stock gonna get called away from me.
What is that? Would you call it a cover call? What does that mean? I mean, I think I know what it means, but
yeah, cover call. You
mean?
buy 100 shares of stock, and then you sell a call against it. So I'll show you here on the right. So I have so it expires. This is it. So what was it? It was a 26. So I just can't see it. Oh, here we go. Cover stock. All right. So what it is, it's here. All right. So what it is okay. You buy 100 shares of the stock, and you sell one call for every 100 shares that you own. That's what a cover call is. So in this case, I would be buying at the 28, and then I would sell higher. So in this one, I'm using the wrong strike because I was trying to show which one I actually had. So I bought at 26. I think it was 26.24 was my entry, and I sold a. No, I said that wrong. I bought a. Yeah. I bought a 26.24. I believe it was. This was the strike price. The strike was $26. And I had a 26 strike, but it was a roll from a previous. And let me go through it all the way. So it was a 20. I started out as a 28, right? So let's just say I went to a 28. So in this case, I bought 100 shares at $28, and I sold a 28 against it, right? So what I would do is, let me do it in two different pieces because it's easier to explain. Let me go back to a single. Okay. All right. So let's just say I bought 100 shares at $28. Right. It's going to cost me $2,800. And let's say I'm going to sell a 29 against it. Right. And choose the right one. Okay. I'm going to sell a 29 against it. And we just using 100 shares as an example. So what happens is, in this particular trade, I will collect 41 cents for that. And the reason why I'm able to sell a call is because it's secured against it. So you all ever heard of a secured credit card? And it's like say, for people that's starting their credit, they're trying to build credit. So a lot of times they'll say, hey, I got $500. They'll go to a bank or credit union, and they'll say, hey, I want to open up, I want to get a secured account. and it's secured because you have collateral. So you give them the $500, they give you a credit card, and you use that. But since it's already a prepaid, so to speak, you can't go over your budget. So your account is secured by the collateral of the $500 that you gave. In a covered call situation, it's the same way. So what happens is when you buy 100 shares of stock, you own that stock. And typically, if you're not using options, you're just waiting for that stock to go up or go down, right? Typically go up if you bought it. But what you can do is you can rent the stock out by selling an option against it. And when you sell the option against it, what you really want to do is collect that premium. But the call that you sold is secured by the 100 shares that you own. And so what it really means, so when you deal with options, there's always two sides to the trade. So since I'm an owner of 100 shares, I have the right to sell 100 shares at a price. And where it's going to be advantageous is I want to sell it for higher than what I want to own it in this particular case, right? Or sell it for where it is. So I'm saying I'm selling this 28. And because I own 100 shares, I have the ability to sell at 28. I mean, I said 28, but 29. I want to sell at this 29. And what I would do is say, hey, I want to sell it. And if someone is willing to pay me 41 cents for it, then I will collect that as a premium. So that'll be my rent that I will collect for selling it. Now, as the owner of the stock, I have the obligation to sell it if it hits 29. If I sell this, right? If I sell this option for that one contract, the buyer, which is the person on the other side, if they actually buy this call from me, then they're saying that, hey, they believe that the stock is going to be higher than $29 in however many days by the end of this week, October 22nd. You can see the price here. And what they're saying is that they believe that the stock is going to be higher. And if so, that 41 cent that they gave me per share is the chance that they want to be able to have. And so if it closes above 1 penny above 29, then they will take the stock from me. They'll give me $29 per share. And then they will take the stock and I'll have to deliver it to them. And so when it expires, it just happens in your account automatically. It's only three things that can happen. Either the stock can go down, and if it closes below 29 and on the October 22nd, then I just keep the 41 cent and I keep my stock. If it closes above the 29, I keep the 41 cent. I sell my stock to them for $29, and I get that money deposited to my account, but the stock goes to the other person, whoever bought this call. So that's what a covered call is. And it's a way to generate income for shares that you own. Whereas if you were just holding these shares, they'll just be sitting there doing nothing for you. So, but the only risk to it is if it's going up and it goes up beyond your, strike price, then you have the obligation of selling it, because as a writer of the option, you have the obligation, and then the person that buys it, they always have the right. So, and it's the language is confusing, but it's just a contract. You say, hey, you go into a store, you see something on a rack, you want to buy it, you pick it up. The contract is that you're going to pick your item up, you're going to walk to the counter, and whatever the price is on the tag, you're going to surrender them that money. They're going to check you through the line, and then you're able to walk out the door because you fulfill the contract of the price that they were asked. Same thing here. You're just saying that, hey, I'm selling something at $29. Do anybody want to buy it? They'll say, yeah, I'll buy it at 41 cents. And the only The only thing that you're waiting on is for the time of the option to expire. And when it expires, then you just basically settle up at that point. You say, hey, if it's $29.01, then I have to sell it to you for 29. They give you the $29 and you keep the, you keep the 41 cent that you collected. If it's below, if it's $29 or below, you just, you keep both your stock and the premium that you collected. So that's what a covered call is. And it's definitely a way to generate income. So I have this covered call. So they're going to call my stock away from me. So initially I had it, I sold a 28. The stock was trading at 26, I think 26.26. Hold on one second. Yeah, the stock was trading at 26.26. And so I sold a 28 and I collected like, I think $1.04. And my stock was getting close to expire. And with options, you have a thing that they call a roll. So you can actually extend it out, buy back what you have, and then issue another thing. So I did that and I collected another 94 cents. So I think a total of like $22.04. And so my strike price, when I entered the second one, I moved my strike price down to $26. And so now, since Fubo is above 28, so the likelihood of this closing above 26 come this Friday is high. So what they're going to do is take my stock away from me at 26 and give me my $26 a share for it. But I've already collected $2.04 on it. So they'll give me the 26. I'll take that, and already collected the $2. So you add those together. So that'll be $28, right? So that'll be fine. Now, come Monday not this coming Monday, but the following Monday, I could go back and put that trade back on again. I just go back to Fubo. Let's just say it's at this $28. I could actually go in here and actually put this trade on. So I say, hey, if the next weekly for the 29, if they're giving up about 41 cents, I can go ahead and put that trade on again, buy those same 100 shares, and then go and sell this call against it and collect 41 cents. So if you think about it, if I were to do that, I would have made $2.04 on those first two options. And then you add another 41 cents on it, then I would, so that'd be $2.45. So what happens there is that, so if you take $2.45 over my initial entry of 26, I think 24. So I would have made like a 9% gain on that. You can look at it as making a 9% gain on it, or you can say you can lower your cost by that amount. So where I paid initially $26.24, if you minus the $2.45, where my initial entry, if I just bought it and did nothing with it, my entry into the stock would be $26.24. But by doing those two calls, those three covered calls, I actually lowered my costs to $23.79. So you can look at it as one, if you want to generate income, or two, you want to lower your cost basis. They both are the same things, just depending upon how you want to look at it. So hopefully that explanation helped. Any questions? Was that confusing? Yes, no, maybe. Do I need to put it in writing, show a little bit better, or not? Everybody
No, I understand it.
Okay. Well, does that make sense?
Made sense to me.
Yeah, sorry I couldn't find my unmute button, but yeah, I think I got it.
Yeah, and it's definitely something you can do. And I tell you, it's an income strategy that you can use to generate income, to lower your cost basis. And so when Milton talks about that PLTR, he's been doing that on that particular stock, and it's definitely a strategy that you can use. Now, I will say, in order to get approved for options, you have to fill out a couple of disclaimers, go to your broker, typically their website, and elect that you want to allow your account for options trading. And so you'll have to do a few things in order to get set up for that. And again, I tell everyone, if you want to learn more about options, take this class here. It's a free class. You can sign up for it. And it's called Beginner's Options Courses. Beginner's Option Course. And it's very good. So I'll put the link again into the chat if you're interested. Take the class. It has videos with it in addition to the text stuff. So it's really helpful. Right, there you go. Let's put it in the text for everyone. Okay. All right. Let's see what else.
Before you go on, I just want to say one more thing about that.
Yes, sir.
You saw how you reduced the price at the end?
Mhm.
At that PLTR, about next November, that stock would be free to me. My cost basis really is just zero because I've been steadily reducing it by playing options on it. So all of a sudden, I have 100 shares of that no matter what the price is, it doesn't really cost me anything because my initial cost has been totally taken out.
Wow. Did everybody understand what he just said?
No, say it again.
Okay. So let me pull up something. I'm gonna illustrate it. It'll help. Okay. So, and we'll use PLTR as an actual example. So okay, PLTR we see is trading at $24, right? So let's say every week we will sell a covered call, right? Now, let's just, for the sake of the example, let's say we can collect 41 cents per week, right? So you take, what is that, 24?
Quick question there, Mike. So is that normally the time frame you guys do as a weekly thing, or does it just vary?
Yeah, I think Milton does weeklies. I think that's just a strategy that he likes. But you don't have to do a weekly. You can choose whatever time frame you want, and so it's just really more of what your particular choice is. But without, that's all I'll say to that. Milton can talk specifically why he chooses weeklies versus something else.
Yeah, mine has more to do with time decay. It's sort of like I have an ally on my side. But I think a lot of people like to do the monthly and stuff. It's more maintenance to do weekly, and you have to do a lot more rolling when you get into trouble and stuff like that. But normally, it's just this PLT, I'm always tight on that because I got in so low. So it's sort of like, it's very hard for me to lose money on that. So I try to make the maximum amount possible on that. That's not really a normal strategy you would use if, you didn't already have a lot of profit in something. So you can take a lot more risk when you already, it's sort of like it's a stock, it's at $10 and you got in at $6. Of course, you can take a lot more risk with it because you have a lot more cushion of profit there.
Yeah. So in this example, so if you say take the 24 divided by the 41. So you got 58.53. So we just rounded up to 59. So you say, all right, so in this example, if we just say, and this is assuming that the stock just stays flat, that it doesn't go anywhere for the next 58 weeks, right? So it'll be a year and two, what's that? Can't do math. A year and 6 weeks, right? So if you were to do that, then year and 7 weeks. But if you were to do that for a full year and 7 weeks and collect 41 cents a year, then that means you would have collected $24 in premium. And if the stock just stayed sideways for a full year, that means your cost for those 100 shares will be zero. So now, whatever this stock does, you're in profit because you've collected enough premium to recoup the initial 100 shares that you bought at $24 because you sold premium for 59 weeks at 41 cents per week. Does that make sense? Yes, no, maybe. Bueller. Is this thing on? Sorry, I couldn't help myself on that one. But do you all understand what we're saying by that? Okay, so let's explain it a little bit more. Okay, you buy 100 shares at $24, right? So that's going to cost you $2,400. Got it? So we're good with that, right? And then every week, we're going to do this. We're going to sell sell a covered call at 41 cents per week. Okay. You do this for 59 weeks. And at those 50, after that, your cost basis is $0. Does that help clarify?
Yep.
So, so now, and again, and that's assuming that the stock just goes to zero. So now let's put a little bit of context in here. Let's go to the weekly. Same stock. So what is this? October 21st. All right, let's go back a year. October 20. All right. We just do have enough data. So you go back to October 20, right? The stock was $9. So if like Milt said, so let's say Milt was doing this for a year, right? It wouldn't even take him 59 weeks because his cost basis is much lower at 24. But let's just say he did it for the sake of just the understanding, right? If he did this for, let's say it still was 59 weeks, right? You go out a year later, the stock is now $24, but he hadn't paid because he did the options on it. His cost basis is $0. So really, he got free stock, $2,400 or 100 shares of the stock at 24 that he paid nothing for, but he only had an initial investment of $9. So if you take his $9 away and it's at 24, so you say the 24 minus 9 in this case is that he made $15 per share profit over the $9 of his initial cost basis that he put in. So another way of saying that is if the stock goes up over time and you can do this to get your cost basis to zero, then that's even more profit. It's probably the easiest way to say that. Milt, you got anything you want to add?
I think you covered it really well. I think most people get confused about what's going on here. Just think of that every week someone is giving you money and you using that money to pay off a loan. And the loan is the stock that you just bought. Let's say you take out a loan for $2,400 and every month you rent out that stock to pay off your loan. I hope that clears it up a little bit more about what's going on here, because it was really confusing to me at the end of what they were talking about. I think they called it stock replacement. And I'm going, huh? And then I finally realized that if that money that I'm getting in is actually taken away from the money I put out in the first place. So all of a sudden, I don't have any money in the stock, but I still have the stock itself.
Yeah, it's definitely a powerful concept, and to your point, Milton, I think of it as like if you have an apartment, right? You buy this apartment, and let's just say you buy a house, right? You bought a house, it costs you $2,400, and then you got a tenant, and then every month your tenant paid you. At some point, the rent that you collect from buying the property, at some point, if you rent it long enough, the tenant will have paid what your initial cost was for it. So now you own the property with no mortgage. It's the same concept.
Okay, so I have a question. Fessing up that I haven't watched the course yet. So maybe I get if the price doesn't go up, but after your time ends and you say that the other person can, let's say, buy the stock at, let's say, 26, then how are you still mapping back to your initial cost basis? Because then don't you then have to, when you get back in, have to buy it at whatever price it is at the end of that week when you try to do that buying it all over again? Or am I getting that wrong?
No, you're absolutely right. So let's go back to this tangible example here. So let's go back to Fubo. Right. So they're gonna call my Fubo away from me this week at 28, right? So what will happen is they call it away Friday at 28. They settle up. They put the 26 in my account, right? And then all I would do is that following Monday, I would just go back in, buy at the 28, buy the 100 shares, and let's just assume it's at the 28 that Monday. I buy the 28, and then I just sell the 29, and I just start collecting here at the 29 level. And so if it ever gets called away, then you just go back and you buy more based upon where it is. Now, the risk to this is that if the stock goes up wildly, so where the $2 difference between where I had the 26 versus if it closes out at 28, I need to have enough cash to be able to go buy those same amount of shares back. I want to try to keep the same amount of shares. And so if I can, I want to buy, 100 shares or more in units of 100, so I can put those back on. But if it went up, so let's just say it went from 28 to 40, right? They called it away from me at 28, right? But by the time that the option expires, and when it gets called away from me that Friday, then that Monday, if it's at $40, I may not have $4,000 that I can put into that stock because it went up so fast. The difference between the 28 and the 40 is $1,200. I might not have an additional $1,200 to get back in it. That's the only risk for this, but that's really the only risk to it. And so you may have to wait till you get enough money to get back to your 100 shares to start to trade over again. Now, if you have more than 100 shares, if you're buying them, so let's say if I bought 500 shares, I have 500 contracts. If it get called away from me at 40 and called away at 26 and it goes up to 40, I can only buy 4 contracts the next time because it went up so much that I don't have enough cash to be able to buy the 5 contracts. But that's fine. Just buy the 4 and repeat the process. Does that make sense?
Yeah. Okay. I got you.
Yeah, and more to what you're saying, that's why I don't make as much money as I could, because I stay a little further out. So the odds are with me that the stock is not going to get that high up. And number 2, I only go out a week. So how many times have you seen stocks go up that much in just that short of a period of time? It does happen, but it's not like it's a lot.
Yeah. So Milton, you say he uses weeklies to capture the time decay. So in options, what happens is the closer the option gets to expiration, the lower the premium is going to become. So what that means is right now, if I bought this on Monday, let's say I can get it at 41 cents, right? And it's a weekly, so it's going to expire next Friday. But by the time this gets closer to Friday, if the stock stays at 28 through the entire week, this is going to go down every day. And there's let me see if I can find. So there's a calculation for it. Let's see if I can. I don't got the Greeks listed here. Let's see. I think it's theta. Okay. Okay. So
Yeah, so
every day.
that theta down at the bottom.
Yeah. Here it is here. So you see this theta right here. It's 5 cents. So every day this option is going to decrease by 5 cents. Because what's that is referred to, that's the calculation for time decay. So Friday, it'll be 35 cents. Monday, 35 cents, another 5 cents. Tuesday, another 5 cents. Wednesday, another 5 cents. Thursday, you know what I mean? And so it's going to, and it's 5.8, right? So it's almost 6 cents, a day. And so as you get closer to Friday, and again, assuming that the stock stays at 28, just for the mathematical calculation here, this option is going to decrease in price. And as it decreases in price, it makes my trade just much more profitable. And so since options, the mechanics of an option has time decay built into it, Milton is saying that, hey, I want to use that time decay to my advantage. And if I do it weekly, I can get this time decay working for me faster because I only have 7 days before this thing expires and I collect my premium. So that's the thing. And then another piece that he said is that where he may not sell the 29, he may go out a little further and sell the 30 because he says, okay, I don't think that this stock is going to go up. What is that? 2 over 28. I can't do the math in my head that fast. Probably about 5%. He doesn't think that this stock is going to go up 5% in 7 days. And if so, he's willing to take a little bit less of premium such that it doesn't get called away. And he doesn't run into that issue, what Brenda described earlier, that if it gets called away higher, but if it never gets called away higher, he just collects his 20 cents over and over and over again. But if it does get called away higher, what happens is it's higher than what his initial stock price is. So he will make $2 on it getting called away in addition to the 20 cents. So his profit on this, if this closed at higher than $30, would be $2.20 if his cost of buying the initial shares was 28. So using covered calls is a good strategy, and I've started playing these more and more. I think I mentioned in one of our other calls. At some point, I want to retire, and what I want to be able to do is take some lump sum of money, use these covered calls in order to generate income to replace the salary that I'm getting now versus what I'll be getting in retirement. So, and what this illustrate, and I used the house analogy before. So if you buy a house, right? So you bought a house for you can't buy a house for $2,400, but let's just say, let's make it real. So you bought it for $240,000, right? And just still using this example, if you just add what I added, 2 zeros. So here where we said we had 41 cents. So if you add, let's just say we had rent of $410. So we saying that was weekly. So you say 410, you do 4 weeks. So it'll be 1640. All right. Now say you're renting this out, $1,640, right? So all you would do is just take the 1640, divide it into the 240,000, and I tell you how long it would take to pay that house off. But once that house is paid off, then you own the house free and clear. It's the same way with this stock. In this example, he bought 100 shares at $2,400. He sells these weekly calls for 41 cents or thereabout. He does that for 59 weeks. Then your cost basis is zero. In the house example, it means that you own the house without a mortgage, or you own the stock without a cost basis. It's free. It's free stock, or a free house in the example here. So, and then so you say so look at an example of, just think Apple, right? Say if you had a strategy here where you go back, let's look at where Apple was. It's really not that long ago. iPhone came out in, I think, 2009. So look here. iPhone, the comparative price to where it is now is $3.32 split adjusted, right? So imagine you have Apple stock for free with a cost basis. Let's make it, let's say with a cost basis of, so say you bought it at 81 bucks, right? And then you did this covered call strategy for years, and now you own Apple stock free. And so if you had 100 shares of Apple and you did that, to where it is now, right? So you talk about $14,000 worth of stock that's free because you sold these calls on it, right? So it's just an example of how you can do this and apply it, and that's assuming that you just want to lower your cost basis. But what some people do as an income strategy, what they'll do is, as opposed to buying the stock back or worrying about the cost basis, they'll just take that weekly covered call amount, and they would just use that, to pay expenses or whatever, live off of. So in another way to think about this is that, so for like retirees, like I was explaining the example, what I want to use it for. But a lot of retirees use what they call utility stocks or like bonds to be able to pay them a certain amount of income based upon lump sums of money that they use such that they can live off of. So let's say, for instance, you got 100K, right? And you say, hey, I'm retired, save this up, while working, whatever. I need to be able to earn some money off of it. So if you would buy $100,000 worth of Fubo, so what is that? Let's see, 100K. All right, at 24. So I can buy just make the math easy. I can buy 4,000 shares, right? And if I buy 4,000 shares, I can then turn around and sell 400 calls, right? And then so if you take 400 calls times the 41 cent, right? So that will be, $164, but you got to remember each call represents $100. So you can collect $164 a week, but when you add that up, is that 16,000? That don't seem right. My math might be off, but you can collect the 164 a week, and then just use that as income to live off of without touching your premium. Now, in this strategy, one thing can happen. And so let me show this, what happened actually on this Fubo, right? So when I started this Fubo trade, again, I bought the shares were trading for $24.24. I sold at 26. But let's look at this Fubo chart. This actually can happen. All right, let's go to my daily. And this is something when you do this covered call strategy. I'll check that. 1 second. There we go. Okay, so I was somewhere in here when I bought that Fubo. It was at 24. So somewhere right in here, right? Well, it was actually on the upside. So 24. But you can see that the stock went down to 23, right? So when the stock was down at the 23 level, I was actually losing money because I lost more than what I had collected. So what I did was just waited it out. But in the case, if you needed the income and that happened to you, you can still get the income on the option that you have, but the premium amount, but the what you pay for the stock can actually go down. And so you can be losing money to the downside. So this is one of the risks that you have to be mindful of when you do this covered call strategy, right? If you're trying to use it for income specifically. So, but and so I'll end with this. Is this that options provide you, no pun intended, but options to do or perform different things. So covered calls is just one strategy to either lower your cost basis or to earn income for a stock that you own that would just be sitting there doing nothing. So might as well put it to work. And really, to me, what it really illustrates is the importance of collateral. If I can spell collateral, yeah. The importance of collateral, right? If you own something that has value, can you put that thing of value to work to generate other income, right? And so that's really, so we're doing it with stocks this way, but you can see here, you can, do it with a house that you own. You can do it with merchandise that you have around your house. Could you rent out something that you have of value to someone to use that's gonna, give you that rent in order to generate some kind of income? So this is a powerful concept, that you can use, and it's just being applied to stocks in this covered call manner. But options, a combination of using stock, calls, and puts provide you a lot of different strategies, and covered call is just one of many types of strategies with options. So notice a little bit more advanced in terms of, what we go over, but as you all, have questions about it, you want to try it. Let me see. So I was telling you all about this position. I'll show you the details here. So this is a site I found out. It's called Born to Sell. So you can see here, I have my Fubo. Let's see, it's on my dashboard. Okay. So you can see I've collected. So my price paid is $26.28. I received $2.04 in premium. My break even is $24.24. The current price is $28.06. And this option expires next week. So my strike is the 26th. And so the current price, so if the current price when the option expires is greater than what my strike price is, they're going to take it away from me. So they're going to give me the $26 per share. They're and that's so what I'm leaving on the table is the difference between my strike price and whatever the current price is. So if I just say it closes Friday at 26.08, then I'll lose the my price paid. So if you did the math there, whatever it is, it's 28.06 minus the 24. Yeah. So I'm leaving $3.82 on the table, but technically, that's not right. It was 26. So $1.82 on the table. So that's what it was, just a straight math. But you got to remember, I've already collected $2.04. So I'm still profitable on the trade by 22 cents as a whole at that moment. But that next Monday, I'll just go back in and put another cover call on it, and then just start collecting that again. So that's where you can just continue to repeat this process. Okay. So this is a site that I found. No, I don't know if this would be interesting to you, but you go in here, you can have different stuff in your watch list, and it'll tell you like, so let's see on the Fubo. To pass it. Okay, yeah. So on this, move too fast. All right, so you can see coming up, they're saying that, hey, take this one. There's a Fubo. Saying I can sell in October 27. I can collect $1 and anywhere between $1.38 to $1.47. I can have some downside protection of 4.9%, and days to expiry is 8. And if it returns flat, I can earn, almost a percent, right? But if I move up in my strike price, let's say if I move up to 29, because the stock is trading at 28.01, move my strike price up. Here's that 41 that we've been talking about here. But if you repeat that weekly, so he says if return flat, that's $1. 1.5%. But and this is where you get into the math a little bit. So you say if I did that weekly, that's 1.5%. But there's 52 weeks a year, right? If you could average that based upon what we were talking about before, in this example here, if you can average that 1.5%, that's 70. That'll come out to 78% per year, right? And so this is another way of looking at what your profit potential could be if you did that over and over and over, based upon gaining 1.5%, which is what the 41 cent represents at that amount. Okay, so just a different way of looking at it, but the number bear, because again, going back to our large numbers, year over year, you just want to be gaining a percentage, right? And so if you do 1.5%, and again, that was showing the 78, but let's just say it wasn't even that aggressive. We've learned in the thing is that if you can average 14.9% a year, your money will double in 5 years, right? So say if you have a portfolio amount of $5,000, you earn 14.9% on your portfolio each year. in 5 years, your $5,000 will now be $10,000. So, all right. So just ways of trying to figure out to make this money work for you. I heard this quote one time that said, people work hard for money in terms of, performing labor, going to a job. But they say you can also make your money, work hard for you by putting your money to work. And that's what we're doing with stocks. We're putting our money to work to buy these instruments, and we want them to work on our behalf, just as if you could clone yourself and, working for 2 employers at one time. So you want your money working for you, just like you work with your body, with your mind, whatever your chosen profession is, and earn a paycheck. All right. So, thanks everybody as always. Any questions before we wrap it up? Did I lose everybody?
Oh, no questions from me. Everything's made sense.
Okay. Milton, Walt.
Yeah, no questions right as of now. Nope.
Okay.
Oh,
So,
getting close.
So just had to, go back and be using your charts. And particularly if you all are going to play options, use your charts in conjunction with different areas you want to choose for your strikes if you're going to be doing the options. And even if you're not going to do the options, still look at your charts to be able to determine your entry and your exit points. Get your watch list. And one thing that I tout a lot as it relates to watch lists, if you get a watch list and you go through it regularly, you'll get familiar with what price areas that stocks like to reverse at, or key areas that it'll get through based upon things that have happened in the past that may give you an indication that, buyers are coming in at this point, or sellers are looking to get out at a certain point. And if you just continue to go through your watch list and identify these areas, they will help you. So I'll give you an example. I said I was going to stop, but here's the last one for BYND. So Beyond Meat, this is one of Kyle's, my cousin, his favorite stocks, right? So it was several times like I saw Beyond Meat get down here to this 115. I didn't buy. I saw it back in May get down here to this 101. And then I saw it again back at this 101 recently. When it got back here and we were looking at the chart, I was like, oh, this is at a buy point. So I put an entry in. So I got in here. But that was just because I had been following this stock for a while. And I knew that this 115, this 100 area between these two support areas, that these were good entry points. So this would have been decent based upon what we saw up to that point. But this is even better, right? And so using those watch lists and going through them, it helps you become familiar, and you can use this price history to your benefit. So do your watch lists, create your support and resistance, go through them periodically so you can become very familiar with these stocks, because they have patterns and trends and that that you can use to your advantage for your entries and your exits. Okay. Any questions? Comments? Criticism?
God damn it. Yeah, I got one.
Yes, sir.
It's not related to that, but since I got you here, crypto, what would you, we've been on a good little run the last week with everything going up. Any thoughts on that, number one? And then, yeah, we'll start there.
Yeah, so news is out that the SEC is going to make a determination, have a deadline to be able to make some comments about a few Bitcoin ETF proposals that are on the table. There's been news reported through several outlets saying that a Bitcoin ETF is going to be approved by the SEC on Monday. Several sources said that that's the case. So this week particularly, you can see, so this is Monday here, Saturday, so I guess it's Monday. So this week we're up, I don't know, 7-8% for the week. Let's see what that is. Somewhere around in here. Yeah, about 12% for the week. So people are anticipating that that's actually going to be true. If that is true, there's going to be a demand for Bitcoin. Bitcoin is the granddaddy of all crypto. So when
Right.
Bitcoin goes up, everything else goes up in crypto. So the idea is that Bitcoin is a non-inflationary asset, meaning that there are only going to ever be 21 million of them. Now, they are divisible up to 8 decimal places, but you can't create more than 21 million, and they're all not created as of yet. I think the last Bitcoin will be mined in, I think, 2040, 2050 or something. But with it not being a inflationary asset, the idea is that you're going to have more demand for a resource, that more of it is not going to be created beyond the 21 million. And so it's just a supply demand dynamic. If you got ETFs coming in, buying more, that's going to open it up to more participants in the market. And you got 100 people showing up to buy, 10 items, then that just means there's more demand. More demand equals higher prices. That's really the basic thesis for it. And if this, and from all intents and purposes, they're thinking that, that this is going to go through on Monday. And if the first one is approved, they believe that other ETFs related to crypto will be approved as well, increasing the demand. And so these ETFs are going to be buying Bitcoin. And so it's going to be reducing the amount of supply, and, it should go higher. That's the basic thesis. So,
Gotcha. Well, that makes sense.
Yeah.
Man, you should have told me this when we were on talking earlier this week. All right, so
I just learned
go
about
ahead.
it. I think the news just came out Friday.
Got you. So 2 questions based on that then, in your opinion. If everything goes up, there's a chance that means a lot of people are going to try to get some margin, some profit out of it. So I guess there's 2 different ways to do it. I'm going to ask you your opinion on it, but you think it's better to try to grab a little now, not even Bitcoin, just some of the altcoins now, or anticipate that crash when everything does spike up, and then hopefully a lot of people sell off, so they'll drop back down? Or because it's been moving the last few days.
Right. So you don't have a crystal ball, so I can't say with any definitive answer. But if I'm just looking at the chart here, we're getting close to the all-time high of 64, right? 64,000. We're within 3,000 points of it, right?
Mm-hmm.
If we get here, the news come out, and so there's a saying, buy the rumor, sell the news. So it could be that we may get a pullback, because if it's announced and it is true, all the anticipatory, interest in it in the last week or so, and some people have been predicting this for a while, but getting, confirmation that this week that it looks like it's going to go through, and then we'll know for certain on Monday. If it happens, then just watch it and see if it extends. One thing that you could look at is if you get you see this little wick on this bar here to the top of this bar. What happens is if you see a bar go up, let me try to find one on the chart that's a little bit more pronounced to the upside.
I think I see one. Yeah.
Yeah, and it's probably
I see that
one here on this point here.
Mm-hmm. I think there's another one to the left, right?
Yeah. So you see this one here. So you get up to a point, it goes up. All it represents is that it hit a high of the day, but then it closed lower. If you see that happen, let me do that. if you see that happen on an extreme amount here, and actually we got it a little bit here on this green bar. But so first I would just mark this 20, the 6,300 level. So let's just mark that. And you want to see a close above there. If you see a close above there and it continues higher, then just ride with it. If this thing continues to retreat and Friday's action is the high of that point, you're probably gonna get a pullback. So again, this is where your levels below become important. So if you say, hey, if we pull back, then look at this 57, you pull back again, look at maybe at this 54, and then possibly at this 52. And then you just trade the chart, is what I would do. If you're talking Bitcoin specifically. Now, if you're talking some of the alts, you can just go through and see. Okay, so it's like Shiba Inu.
Let's do like ETH. Want to do ETH? Let's do ETH.
Yeah, do ETH. All right.
Or Kurt, ADA, one of the two.
Okay, ETH or ADA. All right. Let's see. Sort again. So ADA. So ADA, actually, if you see here, ADA didn't really participate much in this run, right? Because same time frames. So they actually have been going in reverse because they were on a bigger run before, right? So they've actually pulled back. So here, I would let's just chart this. Okay, so I'll say I would look at this 201 to 197 here. I'll see what happens. But again, they've had their run already. I would not be surprised if you just have to watch it. So you can do it in two ways. You can box this in here. You can say, hey, if this trades and it stays in this box, man, it's really a non-event. If it moves to either the upside or moves to the downside, then that's the play, right? But if it's in the box, it's just going sideways. It's really not doing nothing.
Gotcha.
So you can look at it there. Let's go to ETH. Now, ETH has been participating this week just as Bitcoin has gone up. So they're continuing this move up. I'm trying to keep that slope the same. And again, you're getting up to this all-time high. So in this case, this kind of follows the same thing of what you had on that Bitcoin chart. You want to see, are you going to get a close and is it going to break out of this range, or are you just going to get a retreat? So, and this will tell you if it's going to be a buy the rumor, sell the news, where they were buying the rumor, sending it up, but are they going to sell the news? And if so, you'll see a drop. If it's exponential and there's going to be more buyers coming in from there, you should see a break above this range and continue higher. So I wouldn't anticipate on what it's going to do. I'll watch it and see what it does and then react accordingly.
Take a look at Shibu, Mike. I know Kurt was interested in that one.
Yeah. Shiba Inu. Here somewhere. Where is it? There we go. Yeah. So Shiba Inu here. Let's just chart this real quick. So hit an all-time high here, but I'll just draw it here. It's most recent low, but I'll make it here. That means just don't have a lot of price history with this one. Yeah. But you can look at volume. So you see here they got crazy on it back here at the 769 level. We're up 5 times from there, 3 times, 3.5. But over the last few days, it's just been going sideways. Again, you just want to, if you say, hey, throw a box on this and say if it's between here and here, pretty much a non-event, just going sideways. If it can break above here and reach up to this 3173, or if it breaks down to this 2285, to me those are your levels, and then this is just even a smaller range within those higher two resistance at the top and support at the bottom. So, just now, one of the things about crypto, the charts can give you some indication, but charting on crypto and because you got a bunch of retail people in it, and they may not obey some of the rules of the charts as much. So you may have to use a little intuition in your gut in some of these things as well. So I would just caution you. SHIB is much more risky than the other two that we covered. Bitcoin is probably the safest in terms of, it's going to move, but, it's not moving, would move 12%, in a few days. That's a decent move. But the SHIB, that stuff can move, much faster because you're coming from a much lower base, and it's much more speculative. So just be careful is what I would say. Yep.
All right, two questions real quick, and again, if everyone wants to jump off, that's fine. But or maybe three. But I know when I first started talking to you about the crypto space, you gave me like 4 or 5 good ones that have actually done very well for me. Basically, I'm asking, do you think it's too late to even do Bitcoin? I haven't been at all, almost, unless I just get like one of those $10 promotion things. But do you think it's too late at this point?
Yeah, I don't know. Hold on one second. I got a call coming in. Hold on one second.
Yeah, you good.
Okay, sorry about that. I'm sorry. Ask me that again.
Just essentially, do you think there's not any point, but is it too late to do anything significant with Bitcoin?
I would dollar cost average in at this point. I wouldn't.
Okay, interesting.
Just choose, because again, so one, I would keep an eye on that news, see if it's confirmed on Monday. If it is, then that bodes well for the long-term thesis that more money is going to be coming to the space. If that is the case, then what I would say is that you could possibly assume that if they let one in, then others are going to apply as well, because it's just a new asset that people are going to be clamoring for. And these companies that offer instruments in it, they want to use it as another instrument to be able to generate fees, right? So as a result of that, yeah, I think it's good for the space long term, and I think Bitcoin will go up. But in terms of where we are now in the cycle, again, if you go to a weekly, we're right up here at the top. So could it go higher? Yes. But could it go lower? Yes, as well. So I wouldn't make a determination to if I'm just getting into it, I would probably just dollar cost average. Now that's what I would say, because I would want to give you more of a conservative approach. But you have to use your own judgment about where you would think. But if you take a long-term thesis, set up $50, $100, whatever your interval is, and just do it consistently and just buy it that way, and forget about it. But if you want to take more of a speculative approach, and you say, hey, I want to buy a significant amount at this point, just know that you need to watch it, because if this thing turns and retreat, you know, you could be back down here at 52 in a blink of an eye, and you know, and you may like, man, I knew I shouldn't have bought it up here. You know what I'm saying?
Yeah. I'm not thinking about buying it now, just in general. Yeah.
Oh yeah. So
As a
long-term-
general.
yeah. Long term, I think it's an asset class that is gonna be around. And so if you think about, you know, what we've gone through with the corona, right? So if you consider that a bunch of the central banks around the world have been issuing stimulus packages, right? So the idea is that if you inject this amount of money into the system, at some point you're going to get price inflation on goods, right? So, and you know that, you know, go to any drive-through of a fast food restaurant and you'll see it there immediately, right? You know, so you know that prices for goods have gone up because you got all this free money floating around. So the interest rates, we think, are probably gonna start to increase. If that happens, then the cost of money is gonna go up, and as a result of that, all of that, you know, stimulus money that they've injected into the system, they're gonna have to pull it out, you know, with higher rates, and so that can cause you know, some panic in the overall monetary and fiscal markets. And so that could bode well for people putting their assets in crypto, putting their assets in commodities, because these are, you know, hard assets, non-deflationary things. And, you know, gold could be a retreat to safety items, if you will. If you believe that thesis and it plays out, you know, I think the long-term prospects for crypto are good. So.
So I asked you on this on text, but since I got you here, so you said other than a big price dip, there's not too much risk in staking stuff.
No.
All right.
Just do it on the more established the project, the longer it's been around, probably the higher quality of the stake. The newer the coin, the less proven the team is. Don't nobody know about them, the higher increase. So
higher increase of what?
Risk.
Oh,
because
risk.
they could just be a project, and you know, they don't have a team. They're not, you know, say they got a team, but they may not be well funded, you know, and if something happens or whatever, you know, do they have enough money to sustain? And if they don't have money to keep developing, then, you know, the code gets stale, the project gets stale, the coin doesn't have the innovation still going into it, so therefore it can affect the price.
Cool. All right. Yeah, I'm looking at what's your take on Luna?
I bought a little bit. You know, I've heard some good things about it.
Me too. I keep hearing about it. Actually.
Yeah, I haven't. Like, you can go out to. Let's see. I think it's research. Let's see if they've done. Yeah, you can look up a report. See if. Let's see. I was trying to see if they had. Oh, that's, let's try to see if they did a report on Luna. So, you know, you just see what their tech is, proof of stake, trading mechanism, predictable. Yeah, they don't have a whole lot on it.
Yeah, it's I mean, I'm looking at it right now. It's gone up 600% since June.
Yeah, but I'm talking
killing.
about beyond the
Okay.
beyond
Yeah.
just what the thing is done. I want to see really more about what it is they're doing from a project perspective, right? So because any coin can get on a run just because enough people are speculating on it. But in terms of what does the actual project do? All right, so let's see. Programmable for the internet payment network. Utilize a basket of fixed stable coins. Let's see. Okay, so it's a payment network. So I've heard of some of these companies, Ebates particularly. So it looks like they're serving a real problem. Payments within particular verticals: e-commerce, hospitality, food delivery, fashion. That's good. I'll read the white paper. Look at it. So if you say here, this is it's 24 hours. Let's look at a 90-day. Yeah, they're on a nice little run. I mean, so kind of my approach is I don't buy, I don't put all my eggs in one basket. I don't know which one of these are gonna win or who's gonna lose, right? So if you look at, CoinGecko here, you look at the market cap. I mean, anything in this top 50 to 100, right? They can all be the next whatever, but which of those it is, I have no idea. So what you do is say you got $1,000, right? Take $1,000, you buy $100 of 10 different coins, spread it around. That's an approach that you can try. And the reason why I say that is that I can't tell you who the winners and losers are going to be. I just don't know because, they change where something, so for instance, we're looking at Shiba Inu. If you were in that, a month ago, you look like a genius, right? But they're kind of down to sideways now. Last year, Uniswap for the DeFi was the thing. If you got into Doge earlier this year, you'd have been doing fine. But when Elon went on Saturday Night Live, that was peak Doge price. It's retreated since then, right? So
I mean, I guess the thing about what you put the two of the three examples you said, those are meme coins, so with not much utility. So I think that's partly why, right?
Yeah, but yes and no. One of the things that meme coins have for them is that once they become viral, people just jump into them, without any level of rationality. But at the end of the day, you need volume in order. When people are buying, things go up. When people are selling, things go down. So what the reason is, sometimes it doesn't matter, which is crazy, right? But if you want to take more of a measured approach, you would buy things with, real utility that's solving real problems. And so again, if you take the $1,000, $100 per, buy some Bitcoin, buy some Ethereum, you can buy these first three particularly, and then start picking the next 7, based upon what your thesis is around it. You could buy Flow. Flow is, NBA Top Shots and, other stuff, right? Flow is good. Let's see, Solana, right? So that's 5. Then pick 5 more. And again,
yeah, I've got a good portfolio already. Yeah. I think mixed with that kind of stuff, and I've done my due diligence. But
just continue to add to it. Just if you already got a good rounding out, you may want to add or subtract a couple to your core. Do so. But if you got a good one, and there's nothing wrong with adding to what you already have, just to continue to increase your the amount of stuff that you have in those. So yeah.
Cool. All right. Awesome. Well, that's all I got then.
Cool. Anybody else on the crypto Milton or Brad? Any questions?
You know much about Dash?
Yeah. So Dash actually started as a coin called Darknet some time ago, and they rebranded, I don't know, 7-8 years ago to Dash. And so they were pretty popular. They used to be in the top 10 consistently. But just like all of these things, you know, they come in favor, out of favor. So where they're ranked 73rd now, some of the things that were incumbents, you know, 3 years ago, you know, they've dropped in price. But I think it's a good project, you know, again, but the same would apply. You know, put some in, if you want some, put some in there. Just diversify your portfolio. And now, I would, this is the one caveat that I would say. If you just have a hunch about something and it makes no rhyme or if you have a hunch about it and you want to, what's the right way? You want to allocate more of your portfolio into that thing based upon your hunch, your thesis, your, you know, understanding, whatever the case may be, right? You know, don't let me talk you out of that. But what I would say just from an experience perspective is I don't know who the winners are. And so, you know, just diversify a bit. But I will say this, and this is what has happened to me. Ethereum. I was in a coin, it's down in the list, called EOS. I remember when Ethereum came out, and I was in the EOS camp pretty heavily, and I didn't buy Ethereum and really stick with this. And I should have just bought some, put it to the side and forgot about it. But to my detriment, I was so brainwashed by one camp that I didn't diversify. And even though I was sold on the other camp, I didn't hedge my bets by buying Ethereum. And so I missed it. So I would say, if you have a hunch about something, buy a little bit, right? Just buy a little bit. And because one of the things is, if you buy it and you hold it, it's gonna make you pay attention to it more just because you hold some, versus, you know, you thought about it and you said you was gonna buy some, but you didn't. At least, you know, put enough in it, you know, to keep you interested, so you'll follow it. Because what you want to do is just, you know, see what happens, because sometimes your hunches are right. I had a hunch on this, right? I bought this thing really low and it ran like a madman. But why it did, I had some reasons to why I picked it initially, but I never could have foresaw that it did what it did, right? In that one. But, you know, but by the same token, see one, you know, this is one, I used to own a lot of Litecoin, right? But Litecoin went up high as I think like $350 or whatever, but now you see it back down to 189. So, so history has told me to diversify in this crypto, because you will cover yourself, you give yourself the best opportunity to win. But also, if you have a hunch on something, buy a little bit of it, and just follow that inkling that you have with it, and, you know, buy enough where if you're right, that, you know, it'd have been worth your while. So, and the last thing I would say to that is, once something goes up, and if you ever hear yourself saying this to yourself, this is crazy, I can't believe this, sell some, put some, you know, because with all of these things, right? Stock side, crypto, you know, any investment, if it goes up and it exceeds your wildest expectations, the whole reason you got into this is to make some money. You're only going to make some money if you sell. So sell a little bit, do something tangible with it, you know, and leave some in, you know, for higher prices. But because everybody in crypto right now, you got a lot of new people that's in it that haven't seen a crypto winter, meaning you haven't seen a big pullback, a prolonged pullback. I have. It's real and it hurts. particularly when you're looking at your account down, 60% from where it was, and you could have think about all the things that you really wanted to do with that money when you had it in your hand, but you didn't, be proactive. So, when you're right about something and you say, man, this is crazy, I can't believe it went up this much. I don't went up, 4x, 5x, 10x, 20x. Take some of that off and put it in your pocket and do something, do something tangible where you can, say, hey, put a fence in around the house. Got these repairs done, fixed my car, I bought a new car, do something where you can make it meaningful, because this stuff changes. And if you go through a correction and you had, $20,000 in your crypto account and now it's sitting at, 5,000, you're going to be kicking yourself. Believe you me. So with that, that's it. Thanks for the participation, the questions.
No
Just,
question, just quick comment, Mike. I don't know how you guys handle your taxes. I know this is for a later conversation. Maybe I'd like to hear some of you guys' strategies on how you're handling your taxes with all this good stuff.
For crypto or for stock or for both?
Yeah, all the above. Like traditionally I just would do all of our taxes and whatnot. I just didn't know if you guys just use a regular platform or you handle it a different way, do some other accountant to do your taxes or what. But, we can save that for another combo.
Yeah, my quick response is I use TurboTax. I've been using it for, 20 years or so.
Okay. That's what I have now too. I didn't know if with all the trading, if I needed to look at something else, but yeah, that's what I've been using.
Yeah, that's what I use now for the crypto. Sometimes I have another tax thing that I use, and it's just helped me to keep up with, the different trades and stuff like that. But it ends up all getting fed back into TurboTax. And my crypto, I run as a business. And so I file a Schedule C for that. So that's where that stuff goes. Yeah. And again, you can do all that through TurboTax.
Yeah. Okay. Thanks.
Yes, ma'am. Cool. Again, thank you all as always. And we'll do it again next week. Appreciate it.